Money, brought to you by Nairametrics. Of course, I remain Ugodre Obichuku, and we do this every Monday, 8 to 8:30 on the station. Of course, you can also listen to previous episodes on any podcast platform. Just go there and search for Nairametrics, Follow the Money, and you can listen to any of our previous episodes, even this one. If there are things that you probably missed and you just want to, can't replay, you can always listen to it again. All right. This is a show about the stock market, a show about investing. So make sure that you pay attention to some of the nuggets that we're going to be given. Very busy week it was last week. By the way, I'm going to be running solo today. You guys just ride with me. Of course, we will start with the all-share index. We all know that this, like I said, this show focuses a lot on the stock market, and the all-share index, which is the key barometer for how stocks perform during the week, depreciated by 1.36%. And of course, the market capitalization also fell by 1.35% as well. So all-share index currently down 1.36 week to date. The quarter is just barely flat in the quarter, and then year to date on the month is basically flat. Quarter to date is down 6%. Year to date we're still up 31%. Yes, the stock market is still up 31% year to date. Difficult to see how it's going to hold on to this return as we go through the year. There's a lot that is likely going to have a lot of headwinds down the line, but at the moment we're up 31%. And if you also go through some of the main indexes in the exchange, you still see a little bit of drop here and there. The NGX 30 index, which is the 30 most capitalized stocks, also fell slightly during the week by 1.46%. This quarter, that index is down 6%, even though it's up 30 year to date. Key index here to watch is the banking index. The banking index is down 6% year to date. It was kind of flat during the week, down 18% year to date as well. So looks like the banking stocks are dragging the all-share index back, and that's where you're seeing a lot of changes, and everything just started after that bank recapitalization announcement was done back in late March or early April. Looks like investors are reeling from that, and that's why we're having a lot of this downturn in banking stocks. So you might want to pay attention to your banking stock portfolio if you have banking stocks in your portfolio. Pension index also took a little bit of a beating during the week, down 1.14% as well. So basically all the major indexes were all down last week. From what we see here, looks like investors asked to profit taking on the stock market. So we also know that there's also a bit of interest in the fixed income side as well. So you have a lot of investors moving towards fixed income securities. By the way, in case you didn't know, the FGN savings bond, which is a fixed income security that is for retail investors, was announced last week. New issuance last week, and it looks like that is going to be going for as high as 17%, man. So that's almost like free money. So it's a risk-free investment. So if you put 10 million in that savings bond, you're going to be getting 1.7 million. You're putting 1 million, you're going to be getting 170,000 naira in terms of interest. If you put in 100,000, you're going to be getting 17k. So that's basically that, and that's like the highest that we've seen in a while. Typically, FJ saving bonds go for like between 10 and 12%. So it's not going for like 17-18% per annum. So that's cool return there for anyone. Imagine just put in your money and you're not going to do anything. It's just straight returns, risk-free, no issues, no hassles. Of course, people would say, well, there's no capital gains per se in terms of the amount you put in there. But at the end of the day, if you want to hedge against inflation, that is one investment you might want to look at. And maybe that's what's affecting a lot of the investment inflow that we're seeing in the stock market. Nevertheless, we do have gainers and losers during the week. And topping the gainers was Tantalizers. Yeah, Tantalizers gained 20%. 27% actually last week, and I'm going to be talking about Tantalizers as we go on the show. We all know Tantalizers and what they do, but they were top gainers last week at 27% gain. We did have also FTN Cocoa also gained 20%. Presco, which is an oil palm producing company, also gained 15% during the week as well. Oando snuck in there as well, also gained 12% during the week. And of course the NGX, that's the stock, the NGX group, which are the owners of the stock market, also gained 10% during the week. So I mean, there were other gainers here and there, but these were the ones that kind of caught my attention as top gainers. And of course, on the top loser side, a number of companies came in here. PZ Cousins, one of the major top losers last week, lost 27% last week in terms of the value. International Breweries also lost 15%. AXA Mansard, which is an insurance company, did lose 13% last week as well. And of course, Airtel Africa dropped their results last week. I think I'm going to get into that at some point on the second segment of the show. Airtel lost 10% in terms of their market value. So they went from 2,200 naira per share to 1,973 naira per share. Perhaps investors reacting to their numbers. Internal PLC also dropped 9.9%, and of course Beggar Paints also 9%. So that kind of like rounds up some of the gainers and the losers last week. Interestingly, there are no banking stocks anywhere in the top 10 gainers and losers, which is kind of strange because you tend to find banking stocks in there somehow, but not there, because a lot of banking stocks kind of came out flat during the week, and so that's why they didn't really feature that much on the gainers and losers side. But in terms of price adjustments, so if you're a Wema Bank shareholder and you have shares in Wema Bank, they did a price adjustment during the week. So because they paid 50 kobo dividend, so their share price has gone from 7.80 kobo to 7.30 kobo. So when they pay dividend, they tend to take that out of the last share price, which we tend to call cum div, and then when they take that dividend out, it then becomes ex div price. So the ex div price for Wema Bank is 7.30 kobo because they've paid 50 kobo dividends. So if you're a Wema Bank shareholder, you might want to check with your registrar if you haven't seen the alert yet. And if you haven't seen the alert, you better go and get e-dividend. Very easy to get those things. Or just e-dividend form. You can get it. Go to any of your registrars on your bank and then fill the form and get it signed. And this dividend, you just credit your account. Now, there's nothing as sweet as when you just sit down and you just get credit alert, and it's from your investment in a stock. That money just comes in handy. And the good thing if you have very diverse portfolios is you can always get it alerts from several stocks. A lot of Nigerian stocks do pay dividends on a regular basis. So you can actually go an entire quarter, like every quarter in a year, and you're getting dividend alerts. And that money comes in pretty handy. That is why I just love investing in the stock market, because you do get a lot of dividends. So if you are a Wema Bank shareholder, and so you better go check, you probably have gotten dividend by now. If you haven't, you want to talk to your registrar. NASCON as well did also pay dividend. NASCON did pay dividend actually. However, NASCON gave its shareholders a bonus share, which is also called a script dividend. The bonus shares is 1 for 50, right? 1 for 50. So for every 50 shares you have in NASCON, they would give you 1 share. So you can do the math and you see what I meant. So that also had to be taken out of their share price. And so their share price was adjusted from 43 naira 60 kobo to 42 naira 75 kobo. So technically, the whole idea of giving you bonus shares is the company doesn't need to pay that as cash. And so they just give you bonus shares, and then you can go and sell those shares on the stock market if you want to, and you can get the cash, or you just include it as part of your portfolio of investments that you want to hold for NASCON. So NASCON, again, bonus shares 1 for 50 for their shareholders at 42 naira. That means share price reduced to 42 naira 70 kobo. So that basically is it for the stock market last week in terms of the stock market roundup. When I get back on the second segment of the show, we're going to go through a lot of a lot of stuff that happened during the week, and then we can discuss. We'll talk about UPDC. UPDC was in the news. We're going to talk about UACN, CAP, one of my favorite companies, CAP. We're going to talk about tantalizers as well, and then we're going to Airtel and try to find out what happened. And there was SEC. SEC dropped one new rule last week. I think you want to pay attention to what that rule is. I'll explain it when we're back.
Follow the Money with Ugodre. We'll be right back. You're listening to Follow the Money with Ugodre.
All right, we're back. This is Follow the Money with me, Ugodre. We do this every Monday, 8 to 8:30. There are also podcast versions as well of this show that you can always play back and listen to. Again, like, we're in the world of tech, so you all have control to how you want to listen to your favorite program. So you can go watch them on YouTube, or you can just rewind and fast forward on any of your podcast platforms. So you have it right there. So welcome to the second segment of the show. If you missed the first segment, we did a roundup of stocks and how they performed last week. Again, this show is about investing. That's what we talk about, particularly investing in the stock market. We do touch on economic issues once in a while. And yes, talking about economic issues, we expect to see inflation numbers out this week. Most predictions suggest inflation numbers are going to be up, likely going to be up for the next few months. Remember that electricity prices haven't reflected yet on the inflation numbers, likely going to reflect at the end of May, which would you see the numbers in June as well. So we're expecting to see higher inflation rate as we go on, and of course you're going to see strong response from the central bank as they continue that battle against inflation. I do have a challenge with inflation. I mean, I've always been one of those who supported fighting inflation, but looking at some of the recent numbers that I've seen, it kind of feels like maybe fighting inflation might just be the wrong move at the moment. I know that might sound a little controversial, but I kind of think that prices of goods and services and how they've increased in Nigeria still is way cheaper than it is in most countries. I think you might want to look at prices of things here versus prices of things in other countries, and you find out that it's still kind of cheaper here than most countries. So what does that mean? That means, or that sounds like, the bigger problem is not inflation but purchasing power. So Nigerians just don't earn enough money. That is why everything kind of just looks very expensive. We don't earn enough. Wages are just so low. Yeah, like if you like divide your minimum wage per hour, you're probably getting less than $1 an hour in Nigeria, compared to maybe $10 an hour in most European countries or most Western countries. So we're extremely poor in terms of how much we kind of earn in Nigeria. So gives you an idea of what the problem is. Maybe it's so much of growth and less of inflation. So maybe we should focus on growth. Like I said, we're going to deal with this topic extensively maybe next week or one of these days when I get someone in here. We're trying to get a macroeconomic analyst in here, and then we can just delve into this number. So we'll go right into the second segment of the show. This is still a stock market show, so not to deviate too much. UPDC REIT. A REIT is a real estate investment trust, and we don't have many of them on the exchange. And so what REITs do essentially is they take money from investors and then they invest in real estate businesses, and those real estate businesses must generate income annually. So income is usually generated through rent and sale of those properties. And by law, REITs, as they are called, or REITs, depending on how you want to pronounce it, the acronym Real Estate Investment Trust, most of the 95% or so of the profits should be redistributed as dividend. That's the law. And they do have tax incentives for doing that. And so UPDC is one of the REITs that we have on the exchange, and they just released their first quarter numbers. Revenue doubled to 977 million for one quarter, doubled to not actually more than doubled, 108%. And then rental income, which is one of their mainstays, was 350 or so million naira, up down 1.4%. And interestingly, they did make interest income on deposit with banks. That's kind of strange. 240 million. So I really don't know if that is what they should be doing, but they kind of think that they should be deploying that cash into the business itself. So they've basically kept that cash with banks for a quarter, and then they've earned 214 million. Well, 214 million in one quarter. Anyway, pre-tax profit for the bank for UPDC was 789 million, up 114% as well, and so earnings per share at 30 kobo as well. So by the way, this is also their best quarterly numbers since Custodian Investment actually took over the company. Custodian Investment owns majority shares in UPDC rates. I think they own about 51% or so in UPDC rates after they acquired it from UACN. So good piece of business for custodian investors, because a lot of that money also comes to custodian investment, and that should reflect in the dividend that they pay their shareholders eventually. So very interesting numbers. Again, what kind of interests me here is they made most of their money during the quarter from investment in fixed income, right? So what exactly is your business? Real estate? Is your business fixing money with banks? Not like I have any issues with making that much money from your placing deposit with banks. At least the money is working for you, but kind of feels like maybe that capital should be deployed better. The company does have 6 billion in the bank, 6 billion bank balance. So that also sort of more than doubled by 156%. So I guess maybe there's a bit of delay in deploying that capital. So rather than just wait, they kind of fix that money with the bank, and they earn a sizable amount of money, which is also good for their shareholders. So you might want to look at it that way. By the way, companies are also a little bit cautious about deploying capital because of the way the economy is at the moment. It looks like the central bank is not in favor of deploying capital because of higher interest rates, and so companies are very cautious about deploying capital, and so maybe that is why you're seeing this reflect in UPDC's investment strategy. Again, UPDC earned 214 million alone from just fixed deposit in one quarter. Incredible numbers. All right, so we'll move on to a rated transaction as well. UACN, I think there's some rumor during the week, last few weeks, so that UACN was going to delist its subsidiary CAP, Chemical and Allied Paints, which by the way is one of the best run companies on the exchange. That's one company that every year delivers profits, and you might want to check that number. I love that company a lot, and it's always been one of the companies that I've put on my recommendation list. And so, but the gist was that they were going to delist. So they came out to deny it strongly, that look, they were not going to delist at all. Rather, that it's just a rumor. There are no plans for them to delist. So sometimes you just wonder, like someone would tell you, there's no smoke without fire, or there's no fire without smoke, whichever one you want to say first. So maybe there's something going on in there, because that kind of affected the share prices of both companies for a bit. So we're not sure where that rumor came from. They claim it was in some paper somewhere, but that it's not true. In fact, if I want to read out their statement categorically, it says, our attention has been drawn to a Guardian newspaper online publication on April 26, referencing a potential acquisition by UACN of shares held by minority shareholders of Chemical and Allied Products, and a subsequent delisting of CAP, which is the acronym for Chemical and Allied Products, from the Nigerian Exchange Limited. At this time, that is the keyword. At this time, have a way of just putting those things in there so that you can just give yourself a bit of leeway. So at this time, UAC and CAP are not pursuing the above reference actions. UAC and CAP remain committed to growing their respective businesses to deliver value to stakeholders and continue to contribute broadly to the Nigerian economy. So they are denying it, but they also said at this time, which means maybe they could consider this at some other time. So this is one transaction we're going to keep our eyes focused on. We're going to watch this space closely, because if anything like this is likely to happen, trust me, CAP share price is likely going to go up. And so investors are going to pay close attention to what's going to go on between UAC and CAP, and that automatically just makes CAP a stock on my watch list. All right, so we'll move on to the next story. Tantalizers been struggling for a bit, been very difficult. We all know it's one of the most popular fast food companies in Nigeria, one of the pioneers, by the way. They're also listed on the Nigerian exchange. A lot of people don't know that they're listed on the exchange, and they've been listed for quite a while, for years now. But they struggled with profitability over the years, and I'm sure a lot of you who are familiar with fast food joints will know that it's not really as, Tantalizer is not really as hot as it was years ago, even though they still have a lot of loyal customers who go there regularly. So the business has been going through some kind of transformation as they try to restructure their books and restructure their business, and they did have some kind of lifeline during the last few weeks, and they were able to raise ₦1 billion in fresh injection of capital. And from what we gather at Nairametrics, that money was brought in by an who they were, but they weren't going to disclose for reasons for non-disclosure they had signed. But we'll find out eventually, and we're going to give it to you when we find out. But they got an institutional investor. The best we heard was that this is an investor that would with strong foreign affiliation, but with local presence here. So they gave the company ₦1 billion lifeline, so that they can continue with their restructuring plans. Tantalizers has a negative retained earnings of 4 billion or thereabout, which means that they can't pay dividend until they cover that negative retained earnings. Negative retained earnings suggests that is the accumulated losses that they've had over the years. And so I'm sure you probably go there and then you see maybe them increase prices of their food and their services and all that. Always remember that they're still not making money, even though that you might think that their food is expensive. They're not making money at the moment. They're actually posting losses. But they did raise capital, and from what we gather, I think they were able to sell at 60 kobo per share, even though the share price was around 36 kobo. And so that perhaps was explained why they were the top gainers last week. And so investors were like, oh, wait a minute, if somebody could have bought your shares at 60 kobo per share, even though you're trading for 36 kobo per share, then that means you're highly undervalued. And so the share prices just went from 36 kobo to 46 kobo. That is a 27 naira bump, and so that was good for Tantalizers. By the way, Nairametrics broke that story last week, and so perhaps that also must have gotten the attention of investors, and so they rewarded the company with a bump in its share price. So good for Tantalizers shareholders, if there are anyone here. But if maybe you're interested in investing in the stock, remember they have negative retained earnings, so they're unlikely to pay you dividend, but looks like they're going through their transformation process is going well, at least. With the 1 billion fresh capital they have, maybe that's going to give them a little bit of lifeline for them to continue to reinvest in their business and grow and compete as they move on. Nigeria's second largest telecom operator, Airtel, also released their numbers last week. Finally, Airtel's year end is March 31st. Most Nigerian companies' year end is December 31st, but Airtel it's March 31st, and so the numbers were out last week, and not to the surprise of a lot of us, they also had the same challenges that the likes of MTN had, which is FX related losses. But nevertheless, Airtel's revenue, Airtel Africa, by the way, Airtel runs all around most sub-Saharan African countries, but Nigeria contributes more than half of its revenue and profits. So revenue for last year, which is up to March, was a whopping $4.9 billion. Airtel reports in dollars. So Airtel made $4.9 billion, which we can translate to about 6 trillion naira or thereabout. It was down 5% year on year. They blame that on foreign currency adjustments. In terms of expenses, Airtel did $2.5 billion. And in terms of EBITDA, which is the earnings before interest, taxes, depreciation, and amortization, Airtel did $2.4 billion, down 5.7%. Finance cost was more than doubled to $1 billion for Airtel, and so that resulted in a loss after tax of $89 million. and Airtel blamed this on foreign currency devaluation, which affected their numbers. In fact, they did claim that FX, chalked over $1 billion or so of their profitability. So they lost over $1 billion, I think 1.6 or 1.7 billion dollars thereabout to FX, mostly from their Nigerian operations. And I don't think you guys need explanation for that already. You already saw how that also affected MTN, and so Airtel's numbers were down. We're expecting to interview Airtel tomorrow at Nairametrics, so expect to see a story on how Airtel performed. They was going to come and give us a little bit of insight on their numbers. Apart from the fact that they had FX related issues, there were a lot of good things in Airtel's performance during the year. Airtel is now firmly number 2 in terms of largest telecom company in Nigeria, and then they also saw growth in their subscriber numbers, growth as well in their ARPU. So a lot of good things out there in the numbers, and they will be coming to speak to us about that, and we will also likely bring them on the show as well so that they can explain to us. So Airtel also on my radar. And then we go on quickly into the next story that we have here. We just have 3 minutes to go. SEC came out last week with a new rule, and the rule is that private companies that are raising, that want to raise money through fixed income securities, which is maybe bond or so, would need to get approval of SEC. If you don't get approval of SEC, they're going to fine you 10 million naira, and then they can also fine you 100,000 naira every day if you violate that rule. And they also kind of put, I think, a maximum amount that you can kind of raise through this thing. I think it's 15 billion naira. And from the backstory I gather is that this new SEC rule, SEC by the way, Security and Exchange Commission, is aimed at state governments who tend to create SPVs. And when they create these SPVs, those SPVs are special purpose vehicles. The special purpose vehicles often raise money from the private bond market or debt market, and find a way to circumvent the Security and Exchange Commission. And so they're trying to rein in on that, and so they've put up that rule that they have to pay SEC if you're going to be issuing those securities. We do have a new man at the helms of SEC, and he seems to be pulling his weight already. And of course, we end the show with DMO. The Debt Management Office, like I mentioned earlier in the show, is going to raise debt. So if you're interested in buying FGN savings bond, their bonds are maturing. I think they're going to announce this week. They're going to issue bonds, I think, this week. So you might want to speak to your bank about it. And from what we're gathering, interest rates like going to be 17.4% as well. And those bonds are 2-year bonds. So when they list it this year, you get paid your capital in the next 2 years. And so if you're something that you're interested in 2-year or 3-year bonds, there's 3-year bonds as well. You might want to speak to your maybe your broker or your bank about investing in that. I always advocate that you have a mix of fixed income securities in your portfolio. So don't just have equities alone, don't just have real estate alone. You want to have fixed income securities in your portfolio mix, which is almost cash, so that that sort of hedges you against any other risk you take out there. So that basically is the show for today. Again, you can always listen to the show every Monday 8 to 8:30. You can listen to any version of the show on any podcast platform, Spotify, Apple Podcasts, or Google Podcasts, anywhere, and you can listen to previous episodes. Again, thank you for listening. This show is brought to you by Nairametrics. My name is Ugodre, and I'm signing out. And until we do this again next week, we're going to bring in a guest on the show next week, so don't miss next week's episode. You stay good and have a profitable week ahead.